Hello students, welcome back to TG Campus. Hope you are enjoying the series of issue of shares. In the series of issue of shares, in this video we are going to cover another important concept, that is nothing but issue of shares for consideration other than cash. So first of all, we have to understand here, company can issue shares by two ways, that is for cash and for consideration other than cash. So what is meaning of consideration other than cash? It means when company is issuing shares here in this option, company is not receiving money, but instead of money, company is getting some asset from the suppliers, right? So for example, if company purchase 1 lakh rupees of asset or machinery from the supplier, and instead of making payment in cash, company is issuing them shares, and this is nothing but issue of shares for consideration other than cash. And so we have to see here, so what are the accounting treatments, accounting journal entries that we have to pass when company issued shares for consideration other than cash. So let's begin. See here, company may issue shares for consideration other than cash when the company acquires fixed assets such as land and building, machinery, etc. Right? Under such a situation, company may pass following journal entries for recording of this transaction. So first of all, we have to pass journal entry for recording a purchase of that asset, and journal entry will be respective asset account debit to vendor account, that is nothing but seller account. For example, if I purchase machinery, I will be debiting machinery account, and suppose I purchase that machinery from Tata Steel, then I will be crediting Tata, right? So machinery account debit to Tata Limited. Now, so after that, we have to pass journal entry for issuing shares to that company, right? So what will be the journal entry? So we know we are not getting money here, so I am not going to debit bank account, right? So instead of debiting bank account, I need to simply debit a vendor's name. Why? Because in the previous entry, you credited vendor account, and that is nothing but you supposed to pay to the vendor for the machinery purchase. So now here you are settling down vendor's account. So we have to debit vendor's account here, and we have to credit equity share capital. If you are issuing equity shares, then we have to credit equity share capital account here if we are issuing shares, and that is nothing but equity shares. If we are issuing preference shares, then we have to credit preference share capital account. Then we have to credit securities premium. So whenever company issue shares at premium, that is nothing but more than the face value, then we have to credit another account, that is securities premium account, right? So depend upon companies issuing shares at par or premium, we have to develop an entry for issue of shares, right? See here, with the help of this illustration, we can understand now, so which accounting entries we have to pass. Rajan Limited purchase machinery of rupees 6 lakhs from Jagan Traders. It issue equity shares of rupees 10 each, fully paid up in satisfaction of their claim. What entries will be made if such a issue is made at par or at a premium of 50%, right? So accordingly, we have to develop a journal entry. So first journal entry will remain same for issue of shares at par or issue of shares at premium. The first entry will remain same, and that is nothing but purchase of an asset. So Rajan purchased machinery worth rupees 6 lakh from Jagan Traders. So I will be passing first journal entry, that is nothing but machinery account debit, because machine comes into the business, asset comes into the business, so we have to debit it. Machinery account debit for 6 lakhs to Jagan Traders. So we have purchased this machine from Jagan Traders on a credit basis. So we have to pay 6 lakh rupees to Jagan Traders. Jagan Traders is our liability. They are creditors for our business, right? So after passing this journal entry, we have to see now issue of shares at par and issue of shares at premium. Suppose we are settling down this 6 lakh rupees by issuing them our company shares at par only. So it is nothing but, if I calculate number of shares, the number of shares will be total amount divided by issue price per share. So your issue price per share is 10 only, because we are issuing at par, right? Divided by 10. So I will be getting 60,000 number of shares that company is issuing to Jagan traders, right, at rupees 6 lakhs. So what will be the entry? So entry will be Jagan traders account debit to equity share capital account. Company issued 6 lakh rupees of shares to Jagan traders for settlement of his account on purchase of the machinery, right? But suppose if company is issuing these shares at a premium, and premium is 50%, sir, then what? So first of all, we have to calculate issue price here. So what is face value of one share? So face value one share is 10 rupees. What is securities premium reserve amount? So that is 50%. So 50% on what? So we have to calculate 50% on face value only, right? So 10 multiplied by 50%. So I will be getting 5 rupees as a securities premium, right? So therefore, total issue price will be, so total issue price is 15 rupees. So if you see here, a 15 rupees issue price, in that 15 rupees, there are two amounts, 10 rupees towards a capital account and 5 rupees towards securities premium reserve account, right? Now after doing this, you have to calculate number of shares that company is going to issue, right? So that I need to calculate. How to calculate number of shares? So simple, we have to see the purchase price of asset, and that is nothing but 6 lakh rupees. Divided by, you have to do issue price per share. So issue price per share is 15. So if you divide these, you will be getting answer 40,000. So it means company is issuing here 40,000 number of shares at a premium of rupees 5 per share. And now I can pass the journal entry. So journal entry will be Jagan traders account debit, right? Jagan traders account debit. I need to pay him how much? So I need to pay him 6 lakh rupees. Yes, sir, 100%. Then, so we have to credit equity share capital account because we are issuing shares at a premium. Equity share capital account. So 40,000 number of shares multiplied by face value of one share rupees 10. So it comes to 4 lakh rupees. So, and we have to credit securities premium reserve account for 5 rupees of securities premium per share. So that becomes 40,000 multiplied by 5. It becomes a 2 lakh rupees, right? And accordingly, we can pass the journal entry. So here we understood, so what is issue of shares for consideration other than cash and which entries we have to develop when company is issuing shares for not for cash but for consideration other than cash. Hope you understood this. Hope you enjoyed this. Stay tuned for the upcoming videos. Thank you.